When you bid on a tax lien foreclosure, you're obviously going to buy the property. And a tax lien foreclosure, at least here in Texas, wipes out all other liens that exist on the property other than other property tax liens that might be senior to that tax lien. You don't see that happen too often. So if there is a mortgage lien, judgment liens, child support liens, whatever it might be, those will be extinguished by the tax lien foreclosure. Now, sometimes you may have to ask the foreclosing entity, which could be the county or a private tax lien company, if they gave proper notice to any lien holders of record. Here in Texas, they have to give a 30, 60, and 90-day notice out to the borrower on the property. But at the same time, they have to give the 60 and 90-day notices to any lien holders of record as well in order to extinguish them. That's because those entities have the right to step in and pay off the property taxes if they so choose. Sometimes they do, and sometimes they don't. So when you buy this tax lien foreclosure at the auction, most of the times you're going to own the property free and clear. Even IRS liens are extinguished provided that the foreclosing entity provided the IRS their proper 25-day notice prior to the tax foreclosure. Now, once you buy it, one of the biggest questions I get along the way is, can I get title insurance? And the answer is maybe. But in most instances, you are going to have to wait. Title companies are going to want to see a minimum of 2 years typically lapse to make sure that there aren't any repercussions, that proper notice was given to all the parties before they issue it. And sometimes that could go up to 4 years to meet any and all statute of limitation scenarios. It's always best to ask your title company these kind of questions. Get direct answers from their underwriters so you know exactly how to handle those issues. And so again, if there was a mortgage on the property and you bought the property at the tax lien foreclosure, it is gone. If there was a judgment lien, it's gone. But you've got to still deal with redemption rights of the person who was foreclosed on. Now, if the property was a non-owner occupied property, maybe it was land, maybe it was a house, maybe it was a condo, they're going to have, if it's non-owner, as I said, they're going to have 6 months to redeem that property, meaning paying back the person who bought that tax lien 125% of what they paid at the foreclosure auction. On the other hand, if that property is their homestead, now raw land can't be a homestead, but if it's a condo or a home, they're going to have 2 years in which to redeem that property. Now, in that interim time frame, while you're waiting for these time frames to run, you can maintain the property. You can protect the property from deterioration and things of that nature. And those will be items that will be recoverable in the event of redemption. But going in and remodeling the home and spending tens of thousands of dollars, you may not get those dollars back. For instance, if you have a roof that has to be replaced because it's leaking, it's causing problems inside, etc., replacing the roof is a valid scenario. If your water heater is leaking that could damage the property, you could do that too. But replacing the central heat and air because it's old isn't going to be recoverable in most instances, I don't believe. That's not maintaining and protecting the property. Along the way, you could actually lease the property out and generate income on the home while you're going through these time frames. Now, keep in mind that once you buy this property at the tax auction, you need to make sure what years that tax lien covered, because you will be responsible for anything after the foreclosure in the way of property taxes, not just the current year, but for 1 or maybe 2 years prior that weren't part of that tax lien loan that was made on the property or foreclosed on by the counties. So know exactly what you're doing and how to handle things so you can anticipate and expect what you may have to pay out of pocket along the way. So we jump over to HOAs for a moment, and with homeowner associations, there's a little bit of a difference between condos and other HOA type scenarios for single family homes on redemption periods. Texas changed their laws not too long ago, and I'm not sure what other laws have in their state, so you always want to know what your HOA rules are for foreclosure in whatever state you might be in. But typically here in Texas, if you're a condo and there is an HOA foreclosure, the homeowner is going to have a 90-day redemption period. In other HOA scenarios, they might have a 6-month redemption period in order to come in and buy back the property from whomever bought it. Now here in Texas, our laws changed so that if an investor buys a property at the HOA foreclosure and the person who was foreclosed upon wants to redeem that property, they must sell it back for the amount they paid on it, and they don't get any other fees, no interest, no damages, no nothing. They have to turn it back over. If the HOA community repurchases the property through their own lien and mechanisms, they will get up to a 10% cost over and above what they had to pay to redeem the home in that instance. So you need to understand redemption periods for an HOA. You need to understand, do you get paid for any interest or profit if you buy an HOA foreclosure? And here in Texas, it's problematic. Other states may be different, so find out those answers. Now, when an HOA forecloses on a property, it's going to foreclose in the position that its lien was recorded in the deed records. In other words, if there was a first lien mortgage on this home, maybe a second lien mortgage, maybe a judgment lien, and then the HOA lien is filed and foreclosed, you're going to be buying that property subject to all of those liens that are senior to the position of the HOA lien. A lot of times investors think when they buy these that the mortgage companies will automatically work with you. Keep in mind, you are not their borrower. They just got foreclosed on. Some mortgage companies, so long as you bring them current, take care of them, and make their payments, will allow you to continue doing so. They're not going to give that to you in writing in most instances, but they will accept your money and move forward. They still have the right to foreclose, though, at any time. So when you're looking at buying a property at the foreclosure auctions, realize you may have to step in and pay off these underlying liens on the property. Knowing what type of liens these are is so important. For instance, maybe there's an IRS lien or a judgment lien that is existing that is senior to the HOA lien position that is foreclosed on. Do you have to pay those off? No. Could they foreclose on you? Yes. But knowing how IRS and how judgment liens work, their time frames, their maturities, things of this nature, will help you understand the navigation of that along the way. Now, the mortgage companies, though, are going to be a little bit different. They want their money. If they're not getting paid, they're going to instigate foreclosure at some time going forward because they're not going to be extinguished. You'll have to reach out to them, tell them who you are, and see if they'll allow you to continue making payments. And each mortgage company is a little different. So just to recap, guys, these are two definite strategies of acquiring homes in today's marketplace. Make sure you understand what the rules and regulations are in the state where you're performing tax lien foreclosure acquisitions or HOAs along the way. Be prepared to have to deal with issues such as if a foreclosure does occur and there is an occupant in the property, is it the prior owner who was foreclosed on? Was it a tenant? Things you need to think about with the prior owner are you have to give proper notice based upon the state where you are. For instance, here in Texas, it's going to be probably a 3-day notice to vacate. And you may have to file an eviction suit in order to get them out of the home. And of course, that occupant still has the right to even appeal that eviction judgment to a higher court. If that person in the property is a tenant, you may have to consider what is called the Foreclosure Act of 2009. Now that law sunsetted back in, I think 2018, and it was reinstigated by Trump again and is still in effect, meaning if there is a tenant in the property who is making payments and they start to pay you, they do have the right to stay in that property for 90 days so long as they're making their payments to you and paying a reasonable rent. Now, if the rent on the property is $2,000 a month and they're telling you they're only paying $100, okay, that's not reasonable in that regard. But you've got to protect the tenants along the way and understand the rules and regulations and determine who is in that home and how various things are handled, both on redemption periods, which are different from tax liens and HOA liens, and it will greatly help you navigate your acquisition strategies of these type of transactions. So again, guys, if you found this useful, take a minute and like the video. Don't forget to subscribe to the YouTube channel and make any comments below as well. If you'd like to learn more about the creative finance business and things of this nature along the way, take a minute and visit us over at theownerfinancenetwork.com.